last week was very exciting. We had a huge tumble on Wednesday, a big recovery on Friday. We're not doing too much of anything right now. I mean, actually, if you take the NQ and the RTY and add them together and divide by 2, you get pretty much zero. So it's kind of a wash. But we're up a bit on the spider now, and let's just use Friday's highest resistance. If anybody cares, not that they shouldn't, I sold my really short-dated spider puts, the December 31s, early today because I was just kind of hoping things would just fall really swiftly, but they didn't. But it was a good profit anyway. Got them on Friday at a good price, so that's out of there. I'm back to my old self where like I've got months left on these positions. That also almost guarantees a big crash before the 31st. So I'll be furious with myself, but not until then. Here's the EWZ Brazil. Nice drop on this one. It keeps on keeping on. And so we've got a cool new gap based on Friday's low. And I maintain those March puts, and it's just doing what it does. It's a gorgeous pattern. It's pretty much a daily feature on the show, and it's just cruising along. So yay. And what'll help that, I think, is its biggest component, PBR, which itself is down about 1.5%. And if we can break that dashed red line at the bottom, that'll help goose things along. The small caps had their day in the sun after the election, but that's kind of gone already. This is the ratio chart between the NASDAQ 100 and the Russell 2000. And tech has just grabbed the baton and is sprinting ahead again. The mega caps like your Apples, your Alphabets, they continue to dominate, gobbling up a bigger and bigger percentage of the entire market's market cap. So yeah, small caps are not so great anymore. As you can see, the NASDAQ is raging. One item that I sort of regret, but I don't blame myself too badly, is ARM. We've talked about ARM Holdings a lot. It's one of the semiconductor stocks. And this was a real fake out, I got to tell you, because I am a patterns guy. And up until about here, this was still looking pretty good. It was the third instance of a nice rounded top, and it had moved higher, but it was still within the confines of its pattern. But it broke above that, and I just threw my hands up and my arms and was out of it. But it, for those a little more stalwart than myself, it peaked here with a shooting star on the 13th, and it's moved from about 156 down about $30. So ARM is basically at the lowest levels it's seen since early September. And congratulations to any of you who hung on tight. Like I said, the reason I don't really beat myself up too much is because, just kind of hoping things work out isn't a great strategy. The rationale here is a pattern. If it violates the pattern, I'm out. It could have easily gone to $300 a share. And, you just don't want maybe that's it. No, you got to have some kind of rules. But it did tumble quite hard. So there you go. Even some of the most powerful equities are starting to look pretty shaky. Walmart was at the highest point in human history just like 3 trading days ago. And, this is not a collapse or anything like that, but even the likes of Walmart are starting to feel a little bit of the heat. And our old egg friend Calm, even Calm has been falling. This has dropped from 114 back down to the double digits. So it's lost about, I don't know, what's that, 12% or something in a matter of about a week. FICO, whose incredible ascent has always baffled me. This too was at a lifetime high earlier this month. $2,400 is about $340 lower than that right now. And there's one more, Carvana, CVNA, which had this unbelievable rally from almost bankrupt to hundreds of dollars a share. And this had this cute little top and has reversed away from that. And it is approaching its first meaningful level of support, this gap, which is the election gap. But if it breaks that, well, it's probably more to it. One last one. And this is one I took profits on a few weeks back. This was this monster top, Lumen, Lumn, and this is continues to move lower. I had basically taken profits when it got to the bottom of this pattern, but it's even violated this. It's pretty messy. Like I said, when I got out, it doesn't really thrill me when things pierce deeply within the pattern. Again, it kind of negates it. But long term, it's probably going to go what I had anticipated in the first place, which is a massive drop from here down to maybe even just penny stock land. Archer Daniels Midland, this is another long-term chart that we look at, and it's kind of like morphing into, it's like those little babushka Russian stacking dolls. We've got this pattern here and a smaller version here and an even smaller version here. It just keeps scalloping its way lower, and major support does not go all the way down to this trend line. And another one I got out of, Wingstop continues to do nicely. We've done some damage to this support, and this long-term trend line failure could portend nasty things ahead. So the charts are working really well, whether I stick with them or not. Energy, I continue to think, is a really interesting long-term bearish play. Yes, XOP is really, I don't like using the term oversold, and I probably shouldn't. But it's been down really hard, very persistently, all the way back Thanksgiving. So from one holiday to the next, it's almost red every single day. And long term, if this pattern completes, which I'm really confident it will, we could be looking at another one of these again. And in fact, just to be fair, its own top was more like that. So you can see, and this is much bigger. So head and shoulders there, head and shoulders there. It seems really cheap in quotation marks, but it's really just putting the bow on the Christmas wrapping there of what could be a monster top. And so there's individual items, of course, within that look just as good. There's BHP, for example. Here's BP, like so. And then, of course, the only one I'm in actually is COP, Conoco Phillips COP. Nice little top on that one. I'm going too fast for a change. I don't want to run out of symbols before I run out of time. So let's modulate a little bit. Here's a few other bearish positions. I'm still in 14 different bearish positions. And like I said, the one loony one for me, the December 31s, I took profits on that. So these are all minimum March 17 expirations all the way up to January 2026. Here's Caterpillar CAT. And this one, I've lowered, in a lot of cases, I've just cranked the stop loss down to take advantage of the droopage we've had already. Here's Cracker Barrel, down almost 2.5% more today. And this is a weird one because it's like top, and then an attempt at a base here. But it seems to have sort of flopped, which is what I'm counting on. So I'm going to see it curve away from that failed breakout. EWC we mentioned already, so we'll blow past that. Huntsman, HUN, down about 1%. This is a slow mover. These are 2026 puts on this one because, like I say, I want to give it many months of time to sort of burn up. IBM, down a little bit, 0.25%. This one was at a lifetime high just on the 9th. And we've had a couple of nice red days since then. And so I've tightened up the stop to the shooting star peak on Friday. And a little more dangerous one here, Palantir, PLTR. This lifetime high today on an intraday basis. And it got some really good news over the weekend. And you would have expected it to just explode higher. I didn't have a position then. This is a new position today. But it did not. It actually fell a little bit. So like I said, this is probably the most hazardous one. And I've got a tight stop on PLTR. Just to mention crypto in passing, Bitcoin down $4,500. As we zoom in here, you can see that, and these lifetime highs, none of them, be the equity or crypto, none of them are that far away. This lifetime high was just on the 17th. $108,268.45. So that was the peak. So since then, we're down about $16,000. And this is not the first time Bitcoin's gone down a lot. You've had instances where it's lost 50, 60, 70% of its value and then went right on to lifetime highs. I'm sure any crypto person will tell you that. But the crucial thing about the whole crypto space is that it's so important to the psyche of the market, the general zeal for assets, even if the vast majority of equity people couldn't care less about Bitcoin, have never traded Bitcoin and wouldn't even know how to. If they read that it's getting zapped sometime in the next year, that will give them pause, I think, because assets, more or less, they have some gravitational pull with one another. And if it does, of course, MicroStrategy will feel the pain on that. MSTR is down almost 9% today. It once again this weekend gobbled up billions and billions, like Carl Sagan, billions and billions of dollars worth of new Bitcoin. It is absolutely dependent on Bitcoin's continued price ascent into the literally $1 million coin targets that people are talking about. Just to wrap things up, here's a blast from the past in EE. You know what? I'm going to give this one another shot because as disappointing as it was earlier this year, it's worth another try. So new position today on the $72.50 puts for NEE. And with a nice clean stop on that one. And finally, this beast, which is a ratio chart. It's the equal weighted S&P 500 divided by the regular old S&P 500. And all it tells you is how is breadth. And if breadth was perfect, if stocks were moving exactly the same amount, all 500 up or down, it would just be a really boring flat line at 1.0. As it is now, it's nothing of the sort. It had a rally here, and it's resumed its breakdown, which means what we all know, that fewer and fewer stocks are doing all the heavy lifting to keep things propped up, and that's unhealthy.